And hello, how are you doing? This is Galen, and this is Vishal and Company. We're three strong today. We've got Vishal here, right above me, and at the top we've got TK. Joseph is incommunicado today, and Maddie is doing a lead in a film right now. TV movie. Look at her go. She's a star. But we're going to get to business here because basically the markets have taken a dump. In every sense of that word. So, Vishal, do you want to start off with that and tell people just how scared they should be?
All right, for sure, Galen. And I guess maybe a shameless plug, but if you guys are subscribed to our newsletter, I was talking about that. I think it was just sent this morning regarding yesterday's price action. We had a nice green day, and I hinted that, hey, folks, this still could be maybe a dead cat bounce because of a few other charts that we'll just take a look at. But I'll show you guys what I'm sort of worried about here on the S&P 500. Basically, whenever we break out into new record highs, which we did back on October 25th, price tends to come back to retest that zone as new support. So it used to be price ceiling, then it becomes price floor. And we did that, we were doing that. And on that day, on December 1st, this week, it looked like, the buyers were going to step in. A lot of people were claiming, this is where you're going to buy. Instead, we closed below. I got a bit worried. I'm like, hey, look, folks, either we continue to tumble or we'll pull back to retest before we fall. But instead, we got this, right? We got the bull, coming in strong, taking us back above that 45.50 zone. And then today, this happened. We're actually, we're pretty much at the lows of those past 2 days. Just before we went live, we actually made new lows. We were actually breaking below the lows. So I think the next hour and a half here for trading before we end the week is going to be super important, because if we do get a body close, folks, below these two candles from the last 2 days, that's looking quite bearish. Some positive news is, I have drawn this channel going all the way back to basically October 2020. I'm not someone that uses channels too much, but when you're like making new highs and you don't have much support and resistance or price ceiling and floor levels to work with, you have to sort of work with either something called Fibonacci's or you draw these long-term trend lines. And actually, it did hold up quite well when we were testing highs here back in November. So maybe there's something, useful with this trend line. And yes, we are close to the bottom of this trend line. So we'll have to watch for that going forward. But, when I talk about a few other charts that are non-equity related, we'll see why. And speaking about, pullbacks to major support zones, the NASDAQ is actually doing that today. So another good news, I guess, could be if we can get a nice close back above 15,700 by the end of the day. Maybe that sets up for dip buys, next weekend. And just to let you guys know, I'm not buying the dip right now. I'm just sort of cautious here. I'm not stepping in just right now. I like to see that green candle, but, I wanted to see a bit further momentum because, again, that's the way you can avoid a dead cat bounce. On the Dow Jones, things get a bit more, I would say, I don't want to say worrying, but crucial. Let's say the Dow and the Russell were at crucial levels where basically if we do close below this level here around 33,000, I would extend it maybe even lower down to 33,000. But say in the next weeks that happens, it's a new bear market, folks, on the Dow Jones, if that does happen, if that does trigger. And exactly the same here on the Russell, which is actually pretty much at that big support zone. So we could be seeing, folks, a bear market in small caps in the US, probably Canada as well. And this is interesting just because this index, while everything was making new record highs, small caps was ranging since February. We just had that breakout November, had a bit of a move, and just look at all that. We just vomited all those gains back within a few weeks, and now we're basically looking to maybe start a new bear trend. But if there was going to be a market to buy the dip in per se, again, just waiting for a few certain signals, this might be the one to watch, because if this does bounce up, it'll probably help leading the other equity indices higher. But I wanted to talk about three more charts here very quickly. First of all, for the gold and silver guys, let's bring that up. I'm sure we'll talk about Bitcoin in a bit, but gold is actually also falling as well. It's a bit of a green day today, but it's reminiscent of that everything sell-off where basically the cryptos were falling, stocks were falling, gold, silver, commodities were falling, and this everything sell-off, happened in 2020, of course. A lot of that money went into bonds or the dollar. So I want to mention or bring up those charts. So let's start first actually with the VIX. Of course, the fear index. Actually, now we've taken out the highs of 31, which we were talking about just a few days ago. But fear is back, folks, where the VIX is up 22%. Fear is back in the market. So let's keep an eye out on the VIX there. In terms of the dollar, it's still just hovering around our moving average here. And, we'll get to this in just a bit, because we'll talk about two reasons of why this could be happening in the dollar and the markets. And the more interesting one, which will actually lead to those two topics, if I can find that, is the bond market here, which this is crazy, folks, because this is the bond market. When bonds are moving up, it means interest rates are moving down. So we've just had a major breakout here in bonds. This is also signaling risk off. So basically, the asset allocation model in funds and in Wall Street is, you have money in stocks when it's risk on, when things are, chill, there's nothing bad happening. And then when crazy things start to happen, when fear starts to happen, when volatility starts to happen, you sell a portion of your stocks, take your profits, and you run into the safety of bonds. And, we can debate whether bonds are actually safety nowadays. But this is a bit troubling because it is indicating money is running into safety, which could be bad for the stock market. But the more interesting thing is a lot of people are claiming that this stock market sell-off maybe got a bit of leg because of the Fed's comments about, hey, we might have to increase our taper or taper quicker and raise interest rates. Well, folks, the bond market is telling us the complete opposite. It's, money's running into bonds, knowing that the Fed might sell bonds, and interest rates are moving lower rather than, predicting that rates are going to move higher. So the market here is either really, really freaked out, or they're just not putting any, volume. They're not, believing the Fed. They're not trusting what the Fed's going to say. They're basically calling the Fed's a bluff there, which gets us to the second point, and I guess this is going to be a topic we're going to talk about, but is that all a bluff? Is the Fed now going to say, hey, due to the Omicron variant, which is the second reason why people believe the markets are selling off, due to the Omicron variant, we're going to have to now reconsider our taper. We're probably going to do a wait and see and hold approach because we don't know how bad this variant's going to be. So you remember all our taper comments? Well, let's just pause that for a minute. Let's keep the cheap money here going. And, that might be enough to keep markets propped, which is, again, what I was mentioning for some time. When we had everything sell off back here in February or in 2020, we didn't have this type of monetary policy, right? And then obviously when this type of monetary policy started, you could see what happened to the market. So I'm sort of interested to see if the variant cases and stuff get worse and say there is more restrictions and lockdowns. Are markets going to sell off, or are they going to say, hey, this means now the Fed stops tapering, they're not going to raise interest rates, and they're going to keep the money printing going? And that's pretty much what the bond market here is indicating.
I think we don't. I think we. Yeah. I think we have put far too much trust on the Fed as an operating body, and we've also put far too much belief and confidence in the fact that the Omicron variant is causing all this trouble. The Omicron variant, yes, is a problem, very much so. There could be more lockdowns, absolutely. But the problem is the Fed's actions at this point are like trying to close the barn door already after the horses have left. And then as far as we're concerned, the fear of the Omicron is merely a black swan event. This isn't the cause of what's going on right now. We have bloated the market beyond sustainability. And I'm not alone on this, although I've been screaming about it relatively loud for a very long time and made all sorts of people pissed off. But for instance, Berkshire Hathaway, Charlie Munger, just recently in a meeting on Friday today, which would be today, said this is the worst the market has been since the dot-com crash. And in fact, it has been more. Yes. This is not an event that is going to go away. It's not something that was caused by the pandemic. This was something that was exacerbated by it. It's a broken system. And basically, we've grown a bunch of worthless billionaires and unicorns on the market that suck up all this capital and basically leave it valueless. And the second that we have to go out and buy the $20 bread, which is coming, and I'm being exaggerating on the $20 bread, thankfully, hopefully. But I mean, when we have to pull the money out and become or cash in our paper millionaires, we're going to see a radical drop in market prices. Right now, we're seeing the beginning, I think, of a decade-long normalization that isn't going to be pretty for anybody.
I think so. I agree with that. I think it's a combination. I think I know what he's talking about when he says valuation-wise. When you really look back at it, I think most people use the S&P, so I'll use the S&P. The S&P is still relatively below historically where we were in 2000, but it's all the other stuff, the other factors, the other variables that are mixing in. And if you price that in, it's kind of like, oh yeah, you know what? Even with the coronavirus happening, inflation worries, etc., supply chain, that political unrest and populism popping up, the market is generally screaming. Well, it's pretty pricey compared to where it was 20 years ago, 20 some odd years ago. And I share the same thing. I think there's going to be a decade of zero returns or close to negative returns for a lot of people.
You said a decade, right?
A decade, yeah.
Okay, I thought you said a dicking. I was like,
well, that too, but it'll be a decade long of that.
Yeah, hey, if it's long, it's long. But it's going to be a decade of negative returns for a lot of people, and it's going to chase a lot of the younger investors, quote unquote, out of the market and kind of keep them out for a very long time, and then they're gonna go through financial amnesia and not realize that the next bull market is going to pop up again and go back in and try catch up. And
we have the memories of gnats.
So I just bring this chart up, the Nikkei. So TK, are you sort of saying we might see the same sort of issue? Like, people forget Japan had a crazy run back in the late 80s, early 90s. And then basically for 30 years, the market did nothing. I mean, we're talking about even the real estate market. The whole stagflation, the lost generation, that's what people call it, right? For 30 years. And then basically the market finally started to recover, basically 30-year, like prices not seen for 30 years. We're seeing that now. But, some people are claiming it's because money is now running into Japan to look for a good bargain, or people are claiming it's because the Bank of Japan is buying stocks, trying to keep
stocks as well.
Assets profitable.
Well, that's basically it. We're living on a global scale. We're living a false economy. We're having central banks buy into the market, which was never their purview to begin with. They were supposed to deal with monetary policy. That's fucking it. They weren't supposed to deal with the public markets, and what they have been doing on those overnight lends and all that kind of shit has been falsely pumping the market price, right? And creating an atmosphere where it really doesn't exist anymore. It's made up money. If it had entered the system like it should have and actually had been spent by the consumer, we would have seen inflation, devaluation of the currency, all that kind of lovely stuff. They were trying to prevent that, but what they did is they just put it off. And unfortunately, put it off in such a fashion that when it actually takes place, it's going to be an explosion rather than a cessation.
Sure. I'll just throw something controversial here, I guess. You guys remember a few weeks ago, Jack Dorsey was warning us that hyperinflation is coming to the U.S. and the world, and then just a few days ago he quit. He became, I wonder if he's booking it now.
Yeah.
Who knows, man? Sell your stuff, trim your beard. Please trim your beard. Fucking cut that beard, damn it.
I think it'll go down.
Not you, Vishal. I like your beard.
No, thank you. No, he has
What
like
are
a, he has
what
like
are-
a, what do you call it? Who's the guy in Russia that people,
I don't know.
Rasputin, right? That
Yeah,
beard?
Rasputin. Yeah, absolutely. It's
Yeah.
totally Rasputin.
I think it's one of the greatest resignations in CEO history, because after he resignated, I think the stock went up.
It did.
And he made like what 15 or something like that on his initial position. I was just like, wow, that's the quickest 15 million anyone is.
I'm just throwing it out there. I know a lot of people are claiming he ran like his maybe going to focus on like crypto assets, Square.
That's what I
but,
understand. But they've changed the
Yeah,
name of
from-
Square, correct? To Block or something like
Oh,
that.
have they? Okay, I don't know.
Yeah,
to
no.
Block.
He just did that. I don't know. It's
Yeah.
Facebook, Meta, Square, Block. What are these guys doing? I think they're all taking the
Yeah,
same
huh?
drugs.
So I'm also throw something in there that I think a lot of people, especially after Mark came out with the metaverse thing, it just kind of shook people up a little bit more, and the optimism just went to a level that's unsustainable. Is if you go back to interviews with Jeff Bezos in 1999, just before the crash, if you hear what he was talking about, he was saying, yeah, a lot of us are not going to be here. Why not like the companies?
Okay, yeah.
Yeah.
Kind of wish Bezos wasn't here, but I mean that's just me.
Yeah, he's like, I don't even know if Amazon is going to be here in the next 20 years, but we're trying to focus on customers, blah, blah, blah.
Yeah.
And he was like, but you have to accept and admit that the internet is changing. The rhetoric about how society works is going to change. It might not happen overnight, as a lot of people are pricing in,
Right.
but it's going to change. Web 3.0.
No, absolutely. And Mark Zuckerberg is kind of like, at this point, the president of AWL or AOL, right?
Yeah.
I mean, this is how much he has his finger on the pulse now. He doesn't, right? He's like that crazy old single uncle that everybody has that's still trying to wear fashion that's, made yesterday. That this is basically the whole meta game, right? He's trying to refashion himself and the company when it's not that and never will be.
Trying to pivot it from, because I think I don't know which annual report it was. He said if Facebook is to fail, it's to fail not on our ability to monetize, but our ability to change on where the platforms will be today. So for the internet, in the first phase was just information, and it was free. It was just a college thing. The second phase of them was the applications.
I loved the first phase, by the way. It was so fun.
Sadly, I was too young to kind of realize what it was at the time, but
it was awesome.
I knew what it was. I was like, okay, this is information. This is great. Obviously, at the time, I was using it for other things, but it was there in my existence. This second one has definitely changed how the sharing economy, etc., has definitely changed how things happen. This third one is kind of confusing. There's a lot. And you can throw the cryptocurrencies in there, and the whole metaverse of trying to give people power back is the whole essence I've been seeing about the third stage. Give back your privacy, give back your data control. And I'm like, okay, I get that aspect of it, but the prices you're applying to that, to some of these companies, kind of need to realize at some point it's unrealistic. We've been through this before. We thought by this point in time, everyone was going to be living virtually. And we're only touching the surface.
And flying cars and kitchens that make your meals without you having to be present. We think all sorts of things.
I sort of love that, man. I love like looking at, like those memes on the internet of like random, like, big Chungus and all that random weird memes. And all the comments are like, in the 70s, we're going to have flying cars in 2020.
Yeah.
I mean, we get that even more recently with Musk saying that we'd have 1 million robo-taxis by 2021. Woo!
Wow. Like we missed the boat somewhere along the line of technological innovation. I think we missed the monetization of that, because the ideas are there. It's just the execution is kind of, ironically, Elon is the one who says this, although he's the innovative leader right now.
He's the worst offender.
He's like, technology right now has been adapting. It hasn't been innovating. And I was like, Jude, great point. I think you should take a look at your car manufacturer a little bit more if you're saying stuff like that. But it kind of tells you where we're kind of at the peak where there needs to be a disruption.
Yeah.
I'm not talking about Kathy Woods here, but like an actual shakeup.
I don't think anybody ever should. I think we should just stop talking about Kathy Wood.
Kathy Woods, and she's not doing really great right now.
No,
her stock is under $100 now.
She just fucking rode the wave. That's what happened. She wasn't any brilliant. I'm not trying to hack her as a human being. I think that her business philosophy is flawed. But
I think so.
I also probably want to attack a little bit of her character because I think she's knowingly now drank the Kool-Aid and is desperately trying to sucker other people in to continue the dream.
I think she's pushing the metaverse stuff right now.
Oh, Jesus.
Oh, yeah.
Right? Yeah.
Of course she is.
What I think she said, it's going to be, it's a multi-trillion-dollar opportunity.
Yeah, she still says Bitcoin's going to be 500,000. Fuck.
There we go.
Sorry.
And do you know what? To her benefit, it might happen. Great. Okay, but I'd rather it happen with actual tangible.
Well, see, that's the thing. Tangible innovation and tangible performance.
Yeah,
right?
not just
this rollover from the Silicon Valley.com era into selling and then perpetuating a dream.
Yeah,
$1 billion expense is not just sort of a flight of fancy. It's fucking damaging. It's ruined the markets and it's ruining the economy. That's
true. And I think that's kind of what Charlie is kind of alluding to. He's like, in a time like this, a lot of people will, and the SPACs and the VCs. I wrote a piece today on DraftKings, which is being shorted by
Chanos.
By James Chanos.
Yep.
And he's saying, the business model is just shoddy. It's terrible. I don't know how they got to the valuation that they got.
They should have done that with Facebook.
And he's like,
holy crap.
Yeah. And he's
DraftKings might be under $20 stock next week.
Yep.
It's trading right now.
It's been really bad. And the SEC has they amended their report, their 10K, 3 times. 3 times. One amendment is fine.
So we're gonna do this. No. We're gonna do. Yeah. No. We're gonna do this. Damn it.
I believe he also shorted DoorDash as well.
Yeah.
As he should. The gig economy is a fucking false economy. I'm sorry. It deals with the indenturement of your employees, and the rest of us just willing to pay $30 for a fucking burger. Like what?
Yeah, and that's kind of
you gotta love Chanos though. I mean, like everyone's saying, short seller is dead. Like short selling's dead. Don't be a short seller. And then you have a boss like Chanos.
I don't short myself, but I think short sellers are needed in the market.
Yeah, absolutely. They bring
needed in the market.
Unless they get proactive, as we know some people do, and try to destroy companies that don't necessarily deserve it. But short sellers do keep air of legitimacy in the market because they find the guys that are either too stupid or too evil to keep their company in a proper valuation and a business model, right?
And he said it. He's like, a lot of what we're going on with the, like you said, Galen, the gig economy is legal fraud.
Yes,
it's legal fraud. They're following accounting rules. They're following SEC rules. It's just that system of it is so delayed to how fast these guys have gotten capital.
Yeah.
Like to kind of not to go beat a dead horse, but money is flowing so fast to them that they have so much cash to kind of innovate.
Buy their market, which isn't a real market appropriation. Yeah, it's not
that's
growth.
Not growth. Yeah, how can you buy? Yeah, but anyways, if for those who are boring like me, I just do a thought experiment. Go through the S&P 500, the Russell 600, the Russell, and Dow Joneses especially, and just look at the balance sheets. A lot of these companies, they have stacked up so much cash because there's not much else to invest in. There's not anything else they can do.
Outside stock buybacks, right?
Buyback stock, or a lot of them don't even want to pay dividends because of the tax consequences. They rather just buy back stock. But yeah, a lot of these companies just have store-holded cash because there's not much else to do. And they throw it in different projects, cryptos or the metaverse, etc. And I'm like, we're at a point where the companies themselves in this new economy are kind of struggling to reinvest at high rates. And individuals who are trying to invest in the market are also struggling to reinvest in some of these companies that will probably give them potential returns. It's kind of a perfect combination of an overvalued market. And you, in that kind of situation, you can't help but look elsewhere. So you look globally, internationally. If you're a US-based investor, you look internationally, or you look at a different asset class. You want to go to real estate or something like that. But the story is kind of the same there as well. You're like, oh, there's an old bubble everywhere.
Everything bubble, pretty much.
Everything bubble. So where do you put your cash? Yeah, just in anything that has the tag name shared economy or cryptocurrency or this. You just put the money there because you can't put it anywhere else. And that's not a recipe for success. And I think it's kind of why a lot of the big institutions have started stockpiling on treasuries as well. So if you notice, Amazon has a stockpile of treasuries, Apple stockpile of treasuries, etc. And they're just piling up on their cash, getting ready to execute on some of the stuff that's going to happen once we go through this recovery.
Leveraging?
Yeah, the deleveraging.
It's a nice way to say it, I guess.
Hopefully, as Ray Dalio says, it's a beautiful deleveraging, not the messy one that would happen in 08 and Great Depression.
So it's just actually very quickly. I want to step in here and congratulate one of our viewers for being environmentally conscious and then also a little prescient. Their stock HEO, what is it? HEO.V. That would be on the Toronto Venture Exchange. That's HTO Innovation. Water treatment. They said it's one of the only green stocks in their portfolio, which is good. Because basically that's where we are heading, sort of. So, keeping your eye on the stocks that are actually doing something for the world, that's a real smart thing.
I invested in these guys a while back too. So H2O Innovation, anything to do with water treatment and waste management, that sort of aspect. For our viewer, there's the big boy, that's CWW, that's on the Canadian exchange, and that's the global water index. So, it looks just like the S&P. But a lot of money is running into water and water stocks, which also includes, like we said, sewage and waste management, and it pays a dividend as well, 21 cents per quarter. So if you're
there you go, for Julian, you're prescient, my friend. Good CWW. Call. Also, Brandis, don't know what the hell you're doing by posting that link. It was pretty messed up, so I've deleted it. Just so you know, lady. All right, there we go.
Quick word here. Just let's. I know there's probably some people here want to hear our thoughts on cryptos. Cryptos here are falling. So here's a chart of Bitcoin. We were looking at a short around 60K here, and what you have to understand about Bitcoin, and again, this goes back to the debate between Bitcoin and gold. Obviously, maybe right now it's a bit skewed just because Bitcoin was selling off, gold was selling off. Although right now, gold is green and Bitcoin is red. The thing about cryptos is that I still consider them more of a risk on asset, meaning
absolutely.
So when stocks are going up, cryptos will move up together, and there's actually a very strong correlation, positive correlation between cryptos and the stock market. So when you see pressure in the stock market, you will see pressure in cryptos. That's what I'm seeing, and I think there's maybe one more leg lower here on cryptos, perhaps. I know there is a bit of a support leg right here, so some people are watching that to buy that, but 50K is a big number, right? Psychologically important number, so we'll see how Bitcoin
if it breaks that, it's going to slide a lot further.
We tried to break above 60K here so many times, and we just couldn't do it, so keep an eye on that, because I know that their crypto markets are open over the weekend.
I do have great news actually. On
go ahead.
Cryptocurrency phase. I am invested in some cryptocurrencies.
There we go.
But through a company.
Okay.
I don't have actual direct exposure myself, but I think benefiting off companies that will benefit off it is probably, for me, is a safer bet than actual exposure to crypto. So the company is a payment services company, essentially.
Well, interesting.
I think that's what a lot of the funds were doing traditionally. Like they would invest maybe in Coinbase or Galaxy, I guess.
Yeah.
That's interesting. That kind of you're getting into the crypto market. So is that insider trading billionaire hack Kimball Musk. And I'm saying Kimball because I know it's not pronounced correctly just because I don't like the guy. All right. Apparently he's getting into DAOs, decentralized autonomous organizations, which I do think is actually kind of an interesting thing. The ability to build this. Sorry, go ahead.
What are DAOs?
Well, DAOs, what it basically means is that through the use of smart contracts, you insert code and it becomes a functional blockchain, meaning that you can set agendas, or it will set agendas once you've determined the rules. It will have your board meetings. It will set up shipping. It will set up manufacturing agreements. It will take purchases. It will send out product. You could basically get it started and walk away and have it just print money for you.
Wow.
Right?
Okay. Yeah.
Now that, of course, is just, automating the process. You have to come up with a good business idea first before you start becoming, richer than you should be.
Automated.
Right?
Yeah.
Exactly. But I mean, what it does is it provides that. And this is also a great opportunity, if it's used correctly, for us to break free of portal services such as Amazon, such as Uber, such as all these gig economy assholes that are depleting the labor force and eviscerating private sellers. The only ones that are making money on Amazon right now are third-party sellers. Everybody else is selling because they just have to be there, right? It's not because they're getting super rich off of it. Amazon is such a bane. It's merely a reproduction of Sears and Roebuck on a computer. And it's a bad one, by the way.
Yeah.
And they've realized that it's a bad one because they're now starting to tease us with the idea that they're going to start turning their distribution centers into fucking brick and mortar stores.
Yeah.
Well, thanks, Galen, because I'm going to talk about the DAO, on the my next agriculture roundup, because it has some links to growing food.
There you go. Awesome.
Yeah, I saw it pop up as well, and I was like, I didn't see that Elon's brother was so
there's probably lots of insider trading, somebody getting really rich, and you just watching them get money. But whatever.
True. And if the SEC deems it legal, I think it's
yeah. I think they're pretty well got some sort of mask on right now that's muzzled, that's keeping them from doing anything at this point. They're terrified, I think, of what's happening to the market. I think they realize that this is kind of like the banks when they saw the housing market and finally realized that it was fucking pitting out. That they kind of dug their head into the sand, and then when that last ditched effort, when there was no other option available, just made money off the back end by shorting it before everybody else could.
Joe,
I think it's actually a gong show.
The only statement I've heard from the SEC chairman thus far, especially this week, he was talking about the China regulations, the litigation that they're trying to get
delisting, right?
The delistings of Chinese companies. Well, it's one
Didi.
Chinese, but it's only Didi that's been required
right
to list. But obviously, with how the market goes, when one thing goes, everybody assumes the whole market is the same. But he came out and he said what they're trying to do is get regulations that require disclosures from certain companies. So I'll give two examples, and I am biased here. I'll precurse with that, but what's it called? Tencent is traded in the US, but it's OTC. So it's not required to report under GAAP accounting, or it doesn't have to report every quarter. It just reports the annual report, and you go onto their website and you get it. That's how they do it internationally. If you look at, and it's traded OTC.
Yeah, there's a Tencent Music as well, but
there's a 10. Yeah, I think the JD, it's Tenchi or something like that. The ticker.
JD.
For Tencent, sorry. It's
no, it's there. Yeah, sorry, I showed it. It was it was on the OTC.
On the opposite spectrum, you have a company like Baba that that IPO'd later, so had to go through other regulations as well.
Oh yeah, Baba is taking a fucking beating.
It trades on the New York Stock.
Yeah.
So it follows GAAP, and it's under SEC ruling and accounting etc. So those are the same, about the largest companies in China, right? Excluding this one whining company, I think, or something. Oh, and they both follow different rules, but they're both publicly traded here, so they gain U.S. investors' capital. The SEC wants to regulate the ones who are OTC, but they don't have to disclose certain information, which puts people at disadvantage. To make matters worse, this process is a 3-year process.
Oh,
Jesus Christ.
It's a 3-year process.
Man,
and but obviously investors heard delisting and immediately assumed it's going to happen next week.
TK, was Luckin Coffee, do you remember that Chinese company? Was that sort of, what was that about again? Was that similar to this, or was that they were just fraud, like having fraud financial statements?
They were just fraudulent. Yeah, they were just fraudulent.
Okay.
They were traded on...
they're on the OTC now.
OTC. They were New York Stock Exchange as well.
Yep.
Then they delisted to OTC. So if you do get delisted in your DD, I think DD is New York Stock Exchange.
Yep, it's still the New York Stock Exchange, and it's
it'll be delisted to
Ouch.
Once it's delisted to OTC, if it's delisted from there, it'll go to in Aries. So basically, the company has a contract that allows it to buy those shares at a discount from the ADR holders. So of course you will make a material dollar loss, but you're not going to go to zero. If the company is still real, if the company is real, you won't make a complete loss. But the market has priced the entire Chinese market as unreal right now.
Yeah, it's crazy.
The SEC is just trying to, and also obviously the Chinese regulations are kind of intense what they do. So for example, Tencent recently had to only allow children to be on the gaming websites they disallowed them from being on gaming during the week from 8 a.m. to 5 p.m.
Make sure they go to school.
Yeah, make sure they go to school. But I do want to, people roast them for that. But there's something interesting that I noticed on the website. If you go on and you're a child, the ads that you get are mainly educational ads, propaganda ads.
Oh, of course. You can't get away from that.
There's something else. They science, education, and economics.
So no ads about like 40-year-old MILF next door.
There's nothing like that. Not like
is lonely or whatever.
It's kind of like so weird.
So troubling to see as a 7-year-old.
Yeah, right, imagine. But it's just like, I kind of get where they're going with it, but they also need to communicate, but that's not part of their ethos. But there's just a lot of confusion about that. But that's the latest thing that the SEC has talked about, trying to get some sort of rules and regulations. The next 3 years, by the way, I should emphasize that point. It's in the next 3 years of getting companies to report more, not even delist. It's to report more. And I'm like, wow, the market really is excitable.
Very much so. It's definitely the cart leading the horse at this point, or the tail wagging the dog, as it were.
I think so.
The SEC doesn't need to operate in the same or for the same reasons and same goals as the CCP when it's controlling its public market. But I wish it had the same teeth and get-go when people are clearly violating trading rules.
I hope they do at some point. And I've talked to Vishal about this as well. I think it's more on the extreme version, but personally, I do kind of agree with some of what China does when it comes to their public companies. They wiped out $500 billion of market cap from Baba. That's
they should have, because it wasn't really making that money, and then it had a really shitty year.
There's 8 companies in the world that are above that. 8 companies in the world. They wiped out $500 billion in market cap because they wanted to prosperity of the people and etc. It's just their execution is seen as aggressive. If you go to the US, that same process would have taken years of litigation. And it's actually...
it would never have gone through either. Right. They would have had an army of lawyers. It would have ended up in Supreme Court, and it would have just died there. And the kind of Facebook, Amazon, Apple is pretty quiet with their litigations. I don't think it's as upfront as... But they're going through the same process right now where the government is like, you're a monopoly. And Amazon is like, no, we got this wide market that is unaddressable. And it's like, okay, the government obviously here in the States is more like, okay, we'll get the research done and all this, make our analysis and see if you're a monopoly. China is just, you're a monopoly. Yeah. We're going to find you and pay us money.
Yeah, exactly. So Charlie as well is a big advocate for that. If you listen to him, he's like, yeah, I like what China does. they should get rid of their billionaires and all this. And I'm like, such a weird thing for a billionaire to say.
Well, no kidding. But I mean, I think he understands the idea that it really does create such an absolute distortion of the market where companies are able, as I said before, to buy their way into profitability. And it's
Really,
not
yeah.
really profitability when you look at it by the end, the amount of money spent, what really fake amount of dollars have been put in to begin with. Like it's not
It's
right.
it's not. It shouldn't be like this.
Yeah. And I'm not
not
speaking
to,
ethically. I'm speaking economically. It's not
yeah.
right.
I'll speak on the ethics for these gig economy companies that we're now exposed to. We are paying the higher prices. Their business model, as Galen has said, has been to either acquire market share or build into it or innovate into it. There's nothing set in the business model that doesn't allow them from increasing prices on yourself. So I'll give an example that probably people are feeling right now from Uber. Is Uber has an auction kind of system when it comes to your pricing of your ride share. So in your location, when you see $100 to go from maybe downtown LA to somewhere, that's the price that everyone in your area has bidded basically to pay for. Somebody has previously paid that amount, and Uber is not doing it like illegitimately. It's just the algorithm is set up in that way that no matter what price is recognized in the area, that's what you're going to get. And that's where Jim Chanos is like, if you look at that business model is not going to work. These companies are not profitable. DoorDash, Uber, a bunch of these are not profitable because it's not in their business model to be profitable. You can't take that model and make it.
No, they constantly say they're in growth mode. It's just like, what the hell?
Yeah,
man?
as Elon said, negative growth.
Yeah.
Negative. So yeah, I feel not to beat the dead horse, but yeah, there's a lot of misallocation of cash, and if people don't slowly realize where we are, we're gonna have a decade-long version of the Japanese stagflation market. That's my 2 cents.
Yeah, I mean, this is me being Chicken Little, but whatever. You can call me Chicken Little. You just won't be able to call me homeless. If you bought shares during the pandemic, especially speculative ones such as Tesla, good luck in getting your money back.
True. It's going to be a hard sell.
Yeah.
It's going to be a hard sell. That's the question now people ask you is, since you are, predicting a doomsday like that, and I'll ask the roundtable again, what investments would you be looking at for the next 10 years?
Me?
Yeah, outside of the ordinary.
Yeah, no,
so
absolutely.
Vishal is not allowed to say resources.
Okay.
And Galen, you're not allowed to say infrastructure.
All right. Well, I mean, that is one big thing, but I would actually go into food and water.
Yep. Exactly.
Yeah.
Companies that are innovating the growth of agriculture, growing of lab meat, because the actual natural way of doing it is pretty fucking wasteful. And we're still trying to figure out a way to do it in the lab that it's not wasteful. There's still a lot of water consumed in the production of meat. The water processing plants, these are big things. These are things that deal with our survival, air filtration, whatever else is going to actually help the survival of the planet.
Of the people.
This is where I would put my money. Yeah, I should say survival of the people. Planet will survive us. Just so you know, it's always going to go on. We're the ones that are going to disappear.
We're the ones going to. True.
Yeah. I would say the same thing, but I would say that would be my second step. I think some of you guys know, my take is the inflation issue is going to have a currency issue. So my take in the next few years is not making money, but is preserving purchasing power. Then I would be looking at, as Galen said, once we get through that sort of aspect with maybe a new digital currency, likely a new whole currency system, that's when I would be looking at that kind of stuff. But basically, I play it safe. Obviously, I think commodities are the way, but the other way is, in my opinion, if the world goes to crap, what's gonna be
silver
around, right?
Buy the actual ingots, not the paper.
Yeah, that too. But I mean, I'm thinking utilities. So your Fortis BC, because you're always going to be paying gas to heat your home and that kind of stuff. And then I'm thinking things like Loblaws, which again is sort of like a grocery store chain. Here in Canada, you're going to always be buying groceries. These guys will be paying dividends pretty much. I don't think their business is going to go down under, but basically
Going
grocery
US.
chains, people looking for food, and utility, very boring stuff. But they pay dividends and they're probably going to be around here.
For
And I
long.
guess you would call them value. So I'd be looking more at value versus growth just for now until we get past this currency issue. And then once that happens, then I'd be looking at, Galen said, at more
Food.
planet saving stuff. So
That
my
makes sense.
guess, my outlook's maybe a bit more darker and grim than you guys, but I think it's going to be light at the end of the tunnel. But there's going to be a lot of tough years.
It's a long tunnel. It's a long dark tunnel, is what you're.
Yeah,
I mean, it'll get better,
a much
but-
needed. Yeah, it will. A much needed age of normalization is
Exactly.
about to commence, and it has to happen, and it should. Right in the past, in any economy we had, especially when we're talking sort of like a monarchy and stuff, and they had it down. They had a debt jubilee. Came and said everybody doesn't owe anybody any more money, and the economy restarted, and it was all great and grand. Right? We've never done that. We've allowed debtors, is it debtors?
Yeah,
That's what those guys, creditors. Sorry, not debtors.
Yeah.
We've allowed creditors to essentially just stack the deck. And debt doesn't do anything more than create oppression. And basically, what you're doing is just basically lighting fire to a powder keg. If you
And
continue
some
to,
argue,
if you,
we should have had that day of reckoning in 2008.
oh fuck yeah,
instead.
absolutely, that would have been a perfect
Yeah,
time, and it would have
perfect time.
it would have forced us to realize that having too big to fail companies does not work.
Yeah.
That it's much better to have a bunch of smaller companies. That I'm trying to remember the fellow's name that wrote the book Anti-Fragile.
Nassim Taleb.
Yes, wonderful fellow, really, really smart. I really enjoyed the book. But the idea is that if you have a company that's too big to fail, what you end up doing is throwing a giant boulder into the pond, and there's a huge splash, all sorts of displacement, not a nice affair. But if you have a bunch of little companies, a bunch of little savings and loans, a bunch of little companies that go under, and not a huge shit ton, but enough, and you throw that in, the displacement is far more controlled. It doesn't actually cause as much disruption. So this is where we've gotten to. We've gotten way too big. Too many people hold too much debt, and it's just not going to work. And as I said, debt is just basically oppression. Sorry,
True.
It sounds weird, but that's what it is.
But it's true. That's true. Now, as we said at the beginning, probably a selfless plug before we go here is Ray Dalio's book. He just released it a couple of days ago, I think.
When he was on CNBC, so I think that was like 3 days ago.
3 days ago. And he's kind of, talking about what you're alluding to, kind of the change in world order, this longer term cycle than our cyclical cycle that we focus on the 10-year period. And he's kind of alluding to hopefully a deleveraging. That's, again, beautiful. So not like the 3,000 banks going bankrupt in the Great Depression kind of deleveraging, but something more, as the word.
And hopefully
And you know what? This sounds pretty radical, but the elimination of derivatives. Sorry, guys.
I'm on your side. Who was it? Buffett said derivatives are weapons of mass destruction.
They are. Basically, it's just money. It doesn't make any sense. It's like interest.
But I'm a hypocrite. I use them.
We use them, but we don't I guess we don't leverage.
Yeah, I don't leverage up 10 times to make a 2% gain. But I think that the financial system does need an overhaul.
Smack in the face.
Yeah, and that's kind of what he's talking about. He's like, the whole economic system kind of needs that refreshing, and there are powers that are going to come in and kind of change that whole system. I haven't sat down and read it. That's just the synopsis. But yeah, once it comes in Monday, can't wait to sit down with it.
Dude, I'm getting mine Sunday.
I've got a question here. Hey guys, I've got a question.
I'm
I've got a question here by a viewer, and I don't understand it. Perhaps you will. Our SOFI. Are you saying once student loans end in January, that all the students will refinance using SOFI? What is SOFI? Do you guys know?
No, I'm not sure what SOFI is.
SOFI. Here we go. Great Bennett SoFi. Oh, it's a company. Here we go. Q3 earnings. It may be just a soft plug. American online, it probably is, online personal finance company based in San Francisco. Provides financial products that include student loan refinancing, mortgages, personal loans, credit card, investing, and banking. Maybe. I don't know if they will. I mean, I guess that means they're going to a third party besides a bank to refinance their loans. Is that the question this person was asking? Do you think people will leave the banking sector? SoFi is a stock ticker. Thank you, Trip Aces. Just looked it up. I'm thinking the question from this individual is that will students, and hopefully if I'm wrong, please tell me, that they will leave the banking sector and go to private financing and DeFi to reinstate their debts. Yeah,
I think, so I'm obviously a hard economy kind of guy. If you ask Kathy Woods, she has a different opinion on this. But
she has an opinion on everything.
I feel the banking system is, although it might look traditional in nature, I think it is still needed. Does it need a revamp of some of the systems that are in there? Yeah, we're still using the same. There's a guy from Visa who said the banking system is still using the same ledgers, although digital, that they used back in the 1970s. But the system is still good for stuff like student loans, etc. It's the government side that you kind of have to worry about, because their system is a little older than the banking system, because they don't have to innovate as quickly. And a lot of the student loans in the U.S., if this is a U.S. firm, are government funded.
Well, I mean, that's why I was like, wait a minute, because I had a student loan here too, and it's like banks wouldn't really want to give student loans because it's like, it's easy money, but they'd have to charge higher interest, right?
Like 20% and above.
Yeah, whereas government, they don't care because they can just tax people, so they can charge you a small interest rate for student loans.
Student loans. So we can look at SoFi and then kind of see what they're like. But I know most student loans are government funded, so it's more of a infrastructure thing with the government and how they do their loans. And people have been complaining about that for a while, that the loan system needs to be revamped or repaid. I think it was even Obama who wanted to do it, so it's been there for a while.
Yeah, the issue is though, like I know people who work their ass off to pay their loans, and if there was like if they forgave all the loans, then you'd have to sort of give everyone money because there's going to be people. I'm one of those guys too that like work my ass off to pay my student loans. So if all of a sudden it's all wiped out, I'd be like, hey,
yeah,
wait a minute.
Yeah, it's like all that blood, sweat. That's why I'm like the revamp is more difficult. It has to be a collaboration between the public and private sector.
Mm-hmm.
Depending on the majority.
And it would have to be a general overall bailout pretty much.
It'll be interesting to see though how we do react to this. I generally. We were talking earlier this week about the change in narrative from transitory.
Yeah, exactly.
I want to see how the
inflation's here to stay, boys.
Well, do you think now, and this is me now asking a question, beyond Trip Aces, he did thank us. That was what he was asking, or they were asking. I'm sorry, I shouldn't have just gendered that. I don't know who Trip Aces is. So anyway, they said thanks, and my question is do you think that classical third-party lending institutions are going to be the next ones to benefit, or is this just going to immediately go over their heads or around them to go into the DeFi sector?
Yeah,
I actually have a case for this one, and it might be overhauled, but I think it tells kind of the story. If we look at the U.S. and the biggest credit system that they have is mortgages. Mm-hmm. And even after the delevering that happened in 2008, mortgages is still the biggest issue there. So if you look at the two GSEs, the government-sponsored entities, Fannie Mae and Freddie Mae, are both still alive, although on the OTC. So they're in conservatorship right now, owned by the government and being managed by the Federal Home Agency. And that happened because the government realized that they do need to have a control in some of these basic necessity companies that are private. So, for example, the exposure to insurance is a basic need for everybody. This is not credit, but is a basic need for everybody. The government had to kind of regulate it so that the companies make a profit to pay off overhead, etc., but they also focus mainly on providing the service. The idea with the GSEs at the first initiation of them was to provide mortgages cheap for the US. And the US has the best 30-year fixed term mortgage in the world. It actually only has one of the only most stable fixed rate 30-year mortgage in the world. And it's because the GSEs are there to provide that liquidity to the market. And they also do it with third-party services, mortgage-backed companies as well. So it kind of needs although they're in conservatorship because of 2008 and all that, the actual system that had in place where they're kind of government-owned, but they're also private, and they also help the benefit of those third-party providers who are actually intertwined with the people. They've guaranteed close to $3 trillion in mortgages because of that system. And that's a pretty hefty amount to have on your balance sheet if you're a private company. But these guys are government-owned, private, and they also guarantee third-party loans. Right. And that kind of system has allowed the mortgage to be one of the best mortgages in the world. Obviously, we can now argue on the actual credit policies that they have, but they do have forgiveness programs and stuff like that, that the government mandates is probably what people are more worried about. Yeah. So I think a system like that does work, where there's a collaboration between the third parties, these state-owned entities or these GSEs. They follow the Constitution when it comes to their corporate bylaws, right. But they still run as a private entity, separate from the actual government, so that the political cycle doesn't affect them, kind of thing. And
yeah, go ahead. No, I was just going to quickly say I understand the on the DeFi stuff too, but finish your thought there.
Yeah, that's how I would structure a credit overhaul. So if banks are a basic necessity, I wouldn't fully, make them public entities, though. I would kind of have the government have more he said, she said on the bylaws of the company, stopping them from doing weird arbitrages or shorting the whole silver market.
Funnily enough, there's JP Morgan now.
Yeah.
I was just going to quickly say, on the DeFi stuff, there is that whole idea of citizen banking. I'm not, involved in that kind of stuff. I've just looked into it briefly, so I don't know how it, the interest and all that kind of stuff. But I do know there are pools of funds, and you can borrow basically crypto from or funds in that pool from a whole bunch of people that are, supporting it. And apparently the rates are really low, and sometimes there's no interest rates at all. So I know that's going on, and that is sort of this whole citizen banking aspect, and it's pretty much due to decentralized finance and stuff. So,
well, there you go. Holy smokes, we're almost
in
we're almost in an hour. I want to thank all the viewers, and especially the ones that are still on right now. It's been a long road, and we're certainly glad that you've spent the journey with us. We're going to close our show at this point in time because it's best to get out ahead, even though we did go a half hour over. But interesting conversation. I had a good time. I learned a lot. I want to thank Trip Aces and also Julian for their input. And Julian, keep investing in those companies. Let's make the world a better place.
That's true.
I want to say thank you for showing up. This is me, Galen. Above me is Vishal, and at the very top is TK. And we just want to say this is the end of Vishal and Company for this week. Hopefully Joseph or Maddie will be back next week, and so will TK, hopefully. TK, It's always been a pleasure working with you. TK is moving, and he's doing some investment banking stuff. Is that correct? Did I lie when I said that?
No, it's wealth management. And
wealth management. Sorry, I'll shut up now. Jesus Christ, look at me. I'm getting everything wrong.
Same business line.
Awesome. Okay, well, he will be back for the shows. He's just changing locations, and it'll be nice to have sort of a third eye, as it were, to take a look at all these issues. Take care, everyone.
Thank you.
And we are going to see you all very soon. All righty? Bye-bye.
All right.